This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, g'day everyone, it's Liam Garman here, Managing Editor of Real Estate at Momentum Media, the team that brings you the Smart Property Investment Show. And I'm here today in the studio with my co-host,
Emilie, Lauer.
And we're going to be unpacking all the big things in property investing with some super interesting cats. And I feel like I'm a little bit sick. So that's funny because our guest last week, unfortunately, we had to push his back by a few days. And I think I virtually caught whatever flu this gentleman had because on Friday morning, I woke up and it's about 8 a.m., boom, migraine. 2 days later, on the Sunday, double migraine. Now, I think that's because I was doing squats. I was maxing out my squats. So my optic nerve must have been caving in. So maybe there's a little bit of ownership that I have to accept on that. Don't squats when you're on about 500 milligrams of caffeine. But that's just my advice to our listeners. We're here to learn from the expert, Michael Jeffriess, CEO of LightYear Docs and Director of Naked Accounting. Michael, welcome to the podcast.
Welcome, Michael.
Thanks for having me.
Now, I was going through your LinkedIn. It seems like you've got your finger in a few pies. You've got a lot on your plate at the moment. Give us a little bit of insight into your background and where you're working, what you're doing at the moment.
Yeah, definitely. I have a lot of things in the air, and that's quite exciting as well. So my background is I'm a chartered accountant. So I did a commerce law degree back at uni quite some time ago. I didn't go into the legal space, although I have landed in that sphere in the last few years, which is quite interesting, but I don't practice law. I have ownership in an accounting firm and a few other businesses as well.
So that's quite a lot you've got on your plate. Talk us through, so you've got LightYear Docs and Naked Accounting, two separate businesses. What do you do for your clients?
Yeah, so LightYear Group, which owns LightYear Docs and LightYear Legal, it's effectively a legal fintech. So we predominantly, our target clients are accountants and financial planners. We have some lawyers as well. We provide legal and business documentation online, which they complete for their clients, effectively legal precedent documents. So setting up companies' trusts, legal agreements, estate planning, succession planning, asset protection, and the lot. Naked Accounting is a disruptor in the accounting space. So obviously the name is a huge disruptor.
Pretty eye-catching, yeah.
Yeah, it is. And we won the 2023 Australian Accounting Firm of the Year, which was a fantastic award on the back of building out that brand. We used to have what I'd call quite a boring name and brand, and I worked with a marketing team who said, hey, Michael, you're the polar opposite of any other accountant we've met. Your brand and your messaging doesn't suit what you do. And I went, hey, you know what? You're 100% right. Come back with something. And that's what they came back with. And we've built out not only disruption on name, but the way we do things and the services we provide for our clients.
And I know later in the podcast, we're going to be getting into a lot of that. But Emilie, take us away with some of our first questions for the podcast.
Yeah, so Michael, as we mentioned, you've been wearing multiple hats, including the investor's hat. So tell us your investment journey. Start with the very, very beginning. When and where did you buy your first property?
Yeah, it was back around 2001, sort of showing my age a little bit there. And as I said earlier, I did a commerce law degree and I attended Bond University on the Gold Coast. I grew up in New South Wales, but I bought a house. Well, actually, I bought land in Varsity Lakes, and it was a new land subdivision. And luckily enough, we got in at stage one, and I think we bought the block of land back then for about 89,000, built for about 130, 140,000. And later sold it for about 750, 800,000. So in hindsight, I wish I would have bought more of the blocks. But
well, I mean, that's one thing that you can only have in retrospect. When did you sell it?
Would have sold it going on about probably 12 years ago.
That's a good return in what is quite a short time. So talk us through investing through SMSF. You've done a little bit in that front.
I have. I love that space. I mean, I obviously love property, but we bought a property in our SMSF about 2011 at a suburb on the coast called Pimpamar, and we picked it up for about 320,000, I think. We have vested of that property now. We sold it for about 750, 800,000.
And so surely there were challenges along the way in terms of investing in the SMSF space. A lot of people might be a little bit put off by it given the regulatory burdens that it might place on you, or even just the knowledge barrier, I think, is what is enough to keep some people out of using it. Do you have any tips or tricks for how people can effectively use their SMSF or their property investment journey?
Yeah, definitely. I mean, first one always is have the right advisor in your pocket. Make sure you're getting the right advice and stuff. So structuring is really important with SMSF, especially if you're lending. So you can borrow either from external parties, so a bank, or you can borrow from a related party if your related party has the cash and the ability to do that. But the structuring becomes very important through that. Then in relation to, it is a highly compliant environment, but as I said, if you have the right advisor on your side, then they make it quite streamlined. I love SMSF because, I mean, it's a good tax environment. You're only paying 15 cents in the dollar. It's quite protected in that it's a limited recourse borrowing arrangement. So they only have access to the asset if you can't pay, which generally with property, I think if you're willing to reduce your income, so your rent, and meet the market, then you should have a tenant at most times. So you should have an ability to pay it. So, obviously, of the last 12 months or so, we've been living in high interest rate environment, but rents have been going up to allow people to cover those costs as well.
Now, I've got a few questions. So you mentioned borrow through a related party. What does that mean?
Yeah, so you have the ability. So you obviously either yourself or a company that you own could actually set up a related party loan to the SMSF. So you have to have the right structure. So you still got to use a limited recourse borrowing trust that borrows from a related party at a market interest rate. And then that lends to that LRBA trust to actually acquire the property. So it's the exact same mechanism as using a bank. However, you have the ability to receive the effectively interest and costs that the bank receives. And we all know the big four make crazy profits, and it's all on the back of their lending or borrowing books. So why not become the bank if you have the opportunity to do so yourself?
So at that market interest rate, that would be the 4 point whatever, as opposed to say what you would get from the bank at like 5.
Around 6 or 7% now. Yeah.
Yep. Okay, and that makes a lot of sense. Now, for people that haven't had the chance to wade into the world of SMSFs, that's an SMSF advisor. That's not necessarily an accountant, right?
No, it's not necessarily an accountant. There are a lot of regulatory changes happened a few years ago in relation to what advice accountants can provide. They can provide structuring advice in relation to the SMSF, but they can't provide advice in relation to the investment decision in terms of going into property and the various asset classes. So you need to have a financial advisor or planner on your side. We have one of those in our business, so they will go through and provide a statement of what's called a statement of advice in relation to whether or not you should utilize your super funds to, whether you got an SMSF now or you should set up one, and whether you should look at obviously acquiring a property.
That's what we always speak about, which is surrounding yourself with the experts, right?
I'll add on this. There are many advisors on the market. What are some of the due diligence you have to do before choosing who is the right advisor for you?
Yeah, often advisors come through referrals. So I'd be, if you've got a good accountant, probably speak to them, and they've probably got someone they utilize or someone internally. Speak to your friends, your family, and about that. Otherwise, in terms of DD, I'd go out and see a few different advisors. Make sure they're the right fit for you, so you feel comfortable with them, and then find out their knowledge in relation to the particular space you're going for. So find out their knowledge in relation to, which is not easy if you don't understand the space yourself, but find out what they have done and how much they've done in relation to that space and stuff, and go from there.
Oh, and that makes a lot of sense, because if you've got an advisor that would specialize in, say, equities or like share trading as rather than property investment, you want someone that knows the industry that can prompt you in the right direction. So that makes a lot of sense. Now, Michael, when we were talking to your team, one of the big parts in your investment journey was, in fact, that you had invested with friends. And Emilie and I were speaking in the office, and we thought, oh my goodness, because that's something that we've spoken about in the past of we've played with the idea of like, jumping in with friends or family for an investment property, but how bad's Christmas going to be with the first argument?
And look, usually people tell never invest with friends and family, so it's quite surprising you went that way. So do you want to tell us a little bit more about that?
Yeah, it is crazy because, obviously I own an accounting firm, and often I have a lot of friends come in and say we're going into business with each other. And my first thing is, are you sure?
Yeah.
I've helped so many in arguments. And, one of the key things is, which my mate and I did do from day one, was getting the right documentation in place. And, and I'll when they come in and they talk about going to business, I will say, okay, we need to make sure we have the agreements in place. And a lot of the time they go, no, it's okay, we're best mates.
For how long?
Yeah, no.
And I go, yeah, I've seen and heard that so many times before. And I go, at least if we have documentation in place, when you do have an argument or disagreement, we can refer to that. And they're the rules in relation to the game, I guess, that we should be playing by.
So what kind of documentations do you have to put into place if you do want to invest with, I guess, friends, but also family?
Yep. Friends and family is very similar, I guess. First thing is, which I was talking about with the SMSF stuff before, is getting the structure right, how you're going to structure it. Ours are structured through utilising unit trusts. So we hold a percentage of the units. So in this case, him and I own 50% of the units each, in various trusts that then hold the properties. And then we have what I'd call, I guess, a side agreement in relation to a set of rules that state what our intentions are in terms of when we entered into it, and goes through different things. What happens if one party wants to sell? What happens if, we can't afford it, et cetera, et cetera.
You definitely do need those guardrails, or I think Christmas will get pretty bad. And it's funny, years and years and years ago, I was working in a company and I hired my best mate / roommate. So we were best mates, then we moved in together, and then I hired him. And the whole friend group was like, you guys are going to live to regret this. You guys are going to live to regret this. And he and I made an agreement on day one that, we might have bitten off more than we can chew, but what we need to agree is don't let everyone else be right. Even when we hate each other, when we're in public, smile and nod that it's still working. Don't let people know that you got too close. But that is something that Emilie and I were talking about in the office, considering your own investment journey, that it is a frightening thing. And you would have seen that go south a few times, right?
Oh, heaps and heaps, yeah. And my friend and I have had discussions lately where we've had to actually talk about our agreement stuff, because I've been in the mind, with obviously the property market's pumping in relation to cashing out of some of it, because we've done considerably well from something that started from him and I in my backyard going, hey, instead of wasting money going out in the drinking each weekend or having barbecues and drinking, we should chuck some money in a bank account, and that eventually turned into buying a first property, to now going, hey, and I've obviously had a few things happen in my life over the last 12 months where I've sort of gone, hey, should we take some money off the table? And we've had to, discuss those agreements and things like that.
We're going to go to a quick break, and when we're back, we're going to be discussing how a recent event in Michael's life changed his perspective and his focus, and we'll be back in just a second. Smart Property Investment Show with Michael Jeffriess. And just before the break, we were unpacking investing with friends, but now we're going to be changing step a little bit.
Yeah, well, talking about your life and what happened over the past 12 months, you had quite the scare, Michael. You almost died, and that's really changed your perspective on not only on life, but on property. Do you want to give us a little bit more insight on what happened?
Yeah, well, pretty close to just over 12 months ago. I was at my daughter's birthday, and we got home, and I sort of went to sleep. And about 2:00 in the morning, my partner woke up and realised I was not breathing. And fortunately, she works in cardiology, and she resuscitated. Well, she spent about 15 minutes giving me CPR. I'd had a cardiac arrest, and effectively, I guess, passed away for those 15 minutes until the ambulance came, and they shocked me 3 times. It's about an 8% survival rate, so very, very fortunate to be sitting here talking to you now. Went to hospital. 3 days later, I had another cardiac arrest. And so I'm very, very fortunate. But yeah, completely changed my outlook in relation to what's important, who's important in life. And and what my focus should be on.
Yeah. Thank God for your wife, quick thinking and knowledge. And shout out to the paramedics too. And good for you to be here with us today. We talked a little bit about how that changed your perspective. What's your focus now?
Yeah, I mean, my focus in relation was just in terms of, in terms of our business. I changed a lot of things that I was doing that I shouldn't have been doing, and what I was focusing on. Like I sit as a group CEO, so I changed everything back to 3 sort of core focuses in relation to that role, and removed, I guess, some of the frustration. And and I've put a bigger focus on in relation to where I want to get to and what my goals are and stuff. And and property is obviously important to me. I think as a country, we've seen that property provides a great investment vehicle in relation to increasing your assets. And so, I've continued to put a focus on that and in relation to what I can get out of that.
And in particular, in the world of, asset protection and succession planning, that's obviously been quite heavy on your mind given, not even a near-death experience, right? An actual death experience,
Oh,
I think is a very reasonable way of putting it. What does that mean to you? And that seems to me to be something that a lot of Australians should be planning for that they're not necessarily planning for, because I think until Emilie and I started looking at your story online, that's something that we'd never even spoken about in the office. So can you take us through that?
Yeah, definitely. And I actually sit on the board of, strangely enough, on an industry association called the Succession Asset Protection Estate Planning Advisors Association. And
Say that. Let's say that 10 times quick.
For me, then to have an event that I did, as I've spoken on a few webinars, I said I didn't do it intentionally to try and put a focus on the space, but it certainly helped. And we have clients come in, and as advisors and accountants, when we talk to them about this succession, asset protection, estate planning space, it's like something's lifted off, and they go, "This is exactly what I want to speak to my accountant advisor about." So important in relation to it. So, and we put a big concentration on in relation to wealth protection, so family bloodline protection, so passing your assets through your bloodline and stuff. So I think it's paramount in terms of going through in relation to your asset protection and making sure all your assets are protected, you've got the right structures, and then also what happens if an event happens to you in relation to death and stuff. So, and there's quite a process to go through in relation to getting that all together.
And what does that look like? Because we don't really have an inheritance tax in Australia, right? So what does intergenerational asset protection look like tangibly?
Yeah, it's using, obviously, estate planning, you've got to have a will in place, and you've got to make sure it's a valid will. A lot of people have wills, but they're not necessarily what I would call a valid will. And validity can be impacted in relation to it not being signed right, it not being put together right. There's simple things as staples or looking as if a page has been added or removed. Then outside of that, the use of what we call family protection trusts. So utilising very similar to what the royal family has, and they've probably got the most public trust out there in relation to asset protection. As soon as the Queen was about to die, they actually published it around the world, and they said this is our succession plan, which went to obviously Charles and William and everything. And over the past few years, they've removed people out of that, such as Harry and Andrew, because of some of the issues they've faced with that. And so it's really important that you have that. And effectively, it's like what I was talking about before, is having the rules of the game in place. So having the rules, so if something happens, how do you want your assets to be distributed to the next generation, and then to the next generation, the next generation?
Okay, then that's very interesting. Great to hear that Harry and Andrew were removed. But no, it is that is interesting, because it's almost going back to that conversation we're having about, with investing in family and friends, right? And your point was very salient that there's going to come you need that exit strategy. What if there is a point where you look at the joint investment and it's made the money, and you could be rent vesting, for example. You could be 2 young people rent vesting. You've gone in it together. You see an asset that's made its money and you're like, well, I want to exit this and buy my own occupier place. I want to buy my dream house near my family. And then the other party doesn't want that. You do need to have that structure in place, and it makes a lot of sense, especially the ways that you can invalidate a will. I didn't even know that. Looks like pages have been added. So it's an incredibly important thing for our listeners to be aware of. What is next for you, Michael?
We're continuing to grow out our businesses. So Naked Accounting we're opening an office in Townsville at the moment. We just opened up one in Bunbury. So we're increasing our exposure. It's got a great brand We're a sexy brand, attracting a lot of clients. We're growing rapidly. Our staff numbers are growing. From LightYear's group's perspective is we've just recently bought our legal firms, and so we brought that under one umbrella. So it's just a matter of growing that group out and taking it to market.
Are you also going to continue to invest in properties for yourself and your family?
Yeah, 100%. And recently picked up an investment in a commercial property on the Gold Coast in a good location. Definitely going to increase. We're looking at a few things in our SMSF at the moment. Obviously, I got a nice insurance payout when my event happened 12 months ago, which has increased the balance quite nicely. So, yeah, we've got to utilise that into assets, and property is definitely going to be at the forefront on that.
Now, we're going to go to a quick break, and when we're back, we're going to be talking about some interesting work that Naked Accounting is doing with the world of OnlyFans, and we'll be back in just a second. The Smart Property Investment Show with Michael Jeffriess, and just before the podcast, we were discussing what's next on his horizon. But now we're going to take a bit of a step change and look at some interesting work that the company is doing for high-income earners who might not have the longest careers. You specialise in something which I found quite interesting when I was looking through the website online, and that is you had a blog post for OnlyFans models. Now,
yes.
And a lot of people might find that, a little bit humorous, but then I started thinking to myself, there are so many professions out there that are very high income but might be for a very short period of time. And I started thinking to myself, well, in terms of investing, if you're an OnlyFans model, which might be a super high income for, only the case for a few years, it's the same lessons that you would have perhaps on the mines, where because it is so demanding, a FIFO life is so demanding, you might be on a high income for a short period of time, or even say like a footy player, for example, where high income, but your career might only be up to say 5 years because of injuries. Talk us through what you've been doing in advising OnlyFans content creators. How did you come into this space and what does it look like?
Yeah, we landed into the space. Strangely enough, one afternoon on Friday drinks in the office, I was bouncing off. That's when I have my periods of creativity, and it's not from having a couple of beers. Sometimes
completely unrelated. Yeah,
yeah, that's right. But I was sitting there and I was thinking about areas that we should, go into that people aren't doing, and for some reason, Sexpo came at the top of my head, and which has just recently become defunct. And I wonder if an accounting firm has a booth at Sexpo. And so we reached out, went from there, set up one. And from that and getting the team on, it was great for them learning sales skills, especially at an event like that. I saw that there was definitely an opportunity to look after OnlyFans creators, sex workers, etc. That there was a few people touching in it, but there was no one really specialised in and actually help them. And that was the main thing, is helping them on their journey. And, the examples you said before are fantastic because, FIFO workers, footballers, anything short-term, a lot of those areas, they earn big income, but they also spend a lot.
Yeah.
So we've got in and helped a lot of the clients who've come on board in relation to, I guess, diverting that spending habit away from Louis Vuitton handbags and partying to building themselves up a nest egg and assets. So,
for that long-term success. And I would assume also, given the ups and downs of income, if you're in that field, you would actually need the accounting service as well to make sure that you're meeting your tax obligations.
Yeah, correct. And so we do a lot of cash flow reporting, cash flow management, and sort of advisory services in that space. Asset protection is really important, getting structuring right, so the right entity to operate in, and a lot of them don't, want to remain private. So utilizing the right structure, whether it's a company or other, that can enable them to, maintain some of that privacy, or provide a wall up to help them maintain some privacy.
Are there any other tips that you could offer our listeners? Obviously, I don't think many of them are OnlyFans, although some of them might be.
Never know.
Never know.
We never know.
For people that might be listening to this and say, well, I'm on a high income at the moment, but my industry might be, extremely unpredictable and I could be out of a job in 6 months to a year or so. Can you give them some tips on how you've structured their portfolios and how you've guided them on their journey so they can have long-term financial freedom?
Yeah, the big starting point is that budgeting and cash flow. So, but seeing where every dollar comes in and where it goes out, and then working out what should I be spending on, what do I need to live on, and we'll have the hard discussions with clients in relation to that. Sometimes you might have to cut out your avocado on toast and latte every morning, and
Don't say that, you're breaking my heart.
yeah, and and re-engineer those dollars to something an asset that will provide income and grow over time. So.
No, of course. I mean, I tried to cut out my own coffee, and then I just ended up spending several $100s on a new Breville coffee maker. So, and then beans set you back like $40. I don't think I'm better off for it, but
I know it's crazy, isn't it?
And look, you still go and get your coffee downstairs.
I need at least 3 double shot macchiatos a day. I can't function otherwise.
I do the same thing. We've got a nice coffee machine in the office. I'm one of the ones who goes down every morning and
still buys it.
Yep.
I mean, it's funny, like on this podcast, offering people now, obviously, quote unquote, not financial advice, but I think maybe tips is a good way of circumventing that, and then just doing the opposite every day.
Oh, look.
Yeah.
Well, we can't point fingers.
No.
Last tips. Emilie, do you want to take us away?
Yeah, look, Michael, that was such an interesting conversation, and we've been giving tips to people with high incomes that might have a shorter career. What about tips for new investors? Where should they start their journey, and what should they not overlook?
Research. Yeah, research is so important. Like, especially in an asset class like property. I mean, research in any asset class is important, but in properties, and looking at, research covers a lot of things, area, location, demographics, and then buying in the right area. And if you don't feel confident in that, then get help and advice. There's things like buyer's agents out there. Yes, they charge a fee, but generally, they will help you guide you in the right locations and find you the right property for the amount of money that you need to spend. So, and I think once you get your toe in the water, then make sure you look at going again. So, one of the big things I hate seeing is lazy equity sitting on the table and them not utilizing it to buy again, because it's really the compounding effect of having multiple properties or multiple assets working for you and diversifying the risk.
And I think that's something that we hear a lot of. It is that research aspect. And when you talk about buyer's agents, but also the work that you're doing in terms of advising people on, making sure that their money is being spent in the right place and how they could be reframing their spending. The fee, might seem like a lot when it's first up front, but when we're talking decades and decades down the track, and then this adds up to hundreds and hundreds, if not millions of dollars of difference when you're looking decades down the track, it seems like a small upfront fee kind of might be worth it.
Oh, 100%. And, and when we talk about doing asset protection, family wealth protection, and we talk about the fee on that, and I talk to them about potential equity and asset value we're protecting. And then I'll compare it to, say, taking out private health insurance or insurance over the actual property. I go, it's nothing, like really in the scheme of things. You might be paying 1% of the total asset pool, but to be able to wake up every morning and feel that you've got a moat around your castle, everyone wants that.
No, of course. Now, I think that is all we have time for today. Thank you so much for joining us on the podcast, Michael.
Thanks, Michael.
Thank you so much for having me.
That was Michael Jeffriess, CEO of LightYear Docs and Director of Naked Accounting, and we'll be back in just 2 days' time with another Smart Property Investment Show. But until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 88 66 2440 and find out how we can captivate your audience.